We spend a lot of time talking about the price of gold and silver, how we might change the way we buy them based on those prices as if we're trading, pulling profits off the table. And some of us are. Most of us probably aren't. And if you think that that part doesn't matter, well, we should have a quick talk. So gold just hit 2748 earlier this week, the latest in a string of new all-time highs. Now, I've been careful here not to get on and say, I told you so. I told you gold was going to the moon, because even though we've discussed $2,750 and $3,000 and higher a lot, my point in creating this channel has never been to get people into gambling. It's been to simply suggest that gold could quickly become more relevant than it was. I started this channel on the cusp of a pandemic, and it seemed like a pretty decent guess at the time. Now, that relevance has always been more important to me than the current price. I think that gold is a great backup asset, great diversification, whether we're hitting new all-time highs each week or not. Now, a report coming out of Goldman Sachs last week warned of the potential of an extremely soft market over the next 10 years. Got people talking about a lost decade, which is a case where the annualized returns in the market won't beat inflation. Now, Goldman Sachs was suggesting returns below 3%. The hot market just isn't going to last. The catalysts they were giving were everything from government policy and spending to a good old-fashioned reckoning on corporate earnings. Now, company valuations relative to earnings is being called out by a lot more people than just Goldman Sachs here. So we're going to get into how all of this relates to gold and silver, because it does. It just might not be how some people say it does. Summit Metals, that definitely relates to gold and silver. So if you're looking to buy it, check them out, summitmetals.com. They've got great prices on everything, but if you're looking for American Gold Eagles in particular, in any size, they have some of the best prices that I've seen anywhere. Don't take my word on it. I could just be some crazy guy on the internet. Go see for yourself, summitmetals.com. So I just told you my focus here on this channel is to shine a little bit of light on the relevance of gold and silver as diversifications, as practical savings models. Now, the reason that I like gold in particular is that it's more interesting to me to save than just simple dollars in an account. It's also more effective considering its returns over time. Now, my history with it has stayed well ahead of inflation throughout, but I still think of it as an alternative savings model, not an investment. Well, let's start off with the popular comparison we hear around here a lot. That is the S&P 500 versus gold and silver since the year 2000. Now, if you ignore dividends, both gold and silver beat the S&P 500 and the Dow Jones Industrial Average. With dividends, gold still wins, silver barely misses. Now, the reason isn't that gold is the better long-term investment here. It's that the time frame begins at the height of the dot-com bubble. The markets were at a fever pitch and they were about to crash. Now, if you started 2 years later, it would flip. And if we started in 2011, when the metals were going wild, we would see an entirely different story. This is why it's good to diversify. Now, I don't want to dwell on market dynamics. We're here to talk about this stuff, gold, but January 2000 through December 2009 would be considered a lost decade for the U.S. stock market. And that's actual vernacular, not something I'm making up because it sounds cool. Between 2000 and 2009, we had the dot-com bubble burst, the 9/11 terrorist attacks, the Iraq and Afghanistan wars, and 2 recessions. One of those being the global financial crisis of 2008, which was the most severe recession since the Great Depression. Well, as we all know, in that period of time, the markets just didn't do well. So at the most basic level, being diversified would have been a good thing. So when Goldman Sachs released a report suggesting that we might be heading into a decade of 3% annualized returns in the markets, well, cue the lost decade articles and the talking heads. Now, if you're seeing all that, you might think it's time to get everything out of the market, all into metals. Well, personally, though, I would just say be diversified. Goldman Sachs, they've been wrong before. Now, gold and silver had something like a lost decade starting in 2013. Coming off the 2011 run, both of these metals dropped significantly, and they stayed depressed for 6 or 7 years, at least in the case of gold. But if you went all in on silver in 2011, well, you're still significantly underwater today. Now, the lesson that I take from that is simply to stay diversified and beware of people telling you they know what the future holds. Because if you were around and you were aware in 2011, you remember what people were saying about gold and silver. It sounded a lot like what some people are saying today. Now look, I'm not comparing 2011 to today, but that experience is part of why I'm not on here saying, told you so. I'm not going to celebrate high spot price or Goldman Sachs predicting a crap stock market by making bad decisions. I'm just going to take it all as further reason to stay diversified. Now, gold is up, and that's great, but if we saw a crazy lull in price, something that I don't personally expect, but for the sake of argument, let's just say the BMO analyst from a few weeks ago wasn't just forgetting to update his 2026 numbers. He mentioned spot price of gold pulling back about 30%. He mentioned silver pulling back something like 60%. Now, I would still be convinced at those numbers that having a position in gold was the right thing to do, and buying it at $2,100 rather than $2,748 or $2,800 or $3,000 would only help average down costs from those prior 2 years. Now, the crazy play, the one that I'm not recommending because I'm not qualified to, is to keep buying physical metals as per usual and then get a little bit more into ETFs like, say, SLV. That would be to capture some profit from this run. Now, to be clear, I'm not telling anyone to do this, but the advice that we tend to dwell on around here does not translate to buying physical metals. A lot of the analysts commenting on gold or silver are talking about trading models. They aren't buying a bunch of American Gold Eagles or Silver Libertads and then selling at some certain point. They're tapping buttons on screens, getting in and out. Now, I think it's good to consider that when you hear market analysis coming from traders, or you see videos where metals YouTubers are commenting on analysis from traders. Now, personally, I would rather average my costs on the metals that I intend to hold long term and then trade elsewhere. Everything I have on the desk here does not represent an investment that I intend to flip really at any point. It's more likely that I will hand this down to my kids. Now, enough with the disclaimers for a minute. Maybe we do see a lost decade in the markets. None of us know what's coming in the next 10 years. It could be a lost decade. It could be a lot worse. And that's where I think gold works as insurance or hedge, however you want to look at it. And as the likelihood of that kind of market phenomena increase, so does the relevance of gold. Now, if you look at those possibilities and you see gold or silver as protection against that kind of situation, well, just keep buying slow and steady. That's how I tend to think of it. But if you see news of a potential lost decade, the possibility of a stock market slump and a run on metals, and you're thinking, I need more gold and silver to get in on these profits, well, you're thinking of it as a trade. Same case if you want to be able to sell quickly if metal prices begin to go the other way. Now, there's nothing wrong with that, but it's a different strategy. I get the impression, particularly with silver, that YouTubers are talking about price predictions and analysis that's very relevant to traders, but then missing the distinction of trading versus holding. Now, that doesn't mean it isn't happening, that people aren't talking about it. I just keep spotting this confusion. I see people say that you should get excited and buy more when silver looks like it might make a run. Completely ignore the possible downside, because you might do that with a trade. But you wouldn't do that with something you're holding for years or decades, because now you're just increasing your cost. Now, personally, I don't think you buy more in that kind of environment. I also don't think you buy less. I think you try to stick to your schedule. So if I was going to try to sum all this up, Goldman Sachs 3% market returns over the next decade, that's just the most recent in an endless stream of FUD. FUD that might make you think you need to change your approach because somebody who makes it their job to predict the markets is telling you what they think, but it's not really relevant to gold or silver stacking, not in the traditional sense. Now, if I followed market predictions over the years, well, first off, who would we listen to? Because for every opinion, there's an equal and opposite one out there. But it would have been really easy to fall off of my scheduled purchases. I wouldn't have built up what I have. Now, I think the price analysis is interesting. I think that it's relevant. But the only thing that gets me to buy more is a significant drop in price. That or personal convenience. And the only thing that gets me to buy less would be personal inconvenience. I might have something else going. Don't have the money for gold that month. Now, earlier, I wasn't throwing shade at overexcited YouTubers saying this could be the big one. I'm just saying that we might want to keep in mind that we aren't swing traders, so the swings hit us different, if they hit us at all. So let's call it good there. Let us know what you're up to. I think high prices slow a lot of us down, of course, but I'm curious if you're still on a schedule. Let us know in the comments. And while you're there, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.